So real estate today, to answer and get people into it, there's always new programs coming out. And one of the new ones that Brian was telling me about was a down payment assistance loan.
Yep.
All right. Hit me with it.
There's several kinds. We have several available. There's the pure down payment assistance where by the way, every mortgage has a down payment required, except for a VA and a few exceptions. But by and large, most humans are going to have some kind of down payment. And we bring on these down payment assistance programs to help with that.
So like with an FHA, typically is 3.5%.
3.5%, right. It's the minimum down payment. Then we have the Utah Housing Program. We do those all the time. That's a down payment assistance program. We have a Guild Mortgage has an in-house one where we give a grant, like not a loan, but an actual grant of some money depending on your income level. We use that all the time. And there's a bunch of different ones.
Well, and there's cities, that do that same type of thing.
Yep.
The last time I saw Provo City, if you had an old home downtown and you revitalized or made it look better, then they would forgive. I think it was up to $5,000 or something like that.
For rehab, yeah.
And
they'll also get up to $40,000 for a down payment, depending on where it's at, we're in the city. And most cities in Utah have them. Most cities around the country have them, and they're awesome. Some of them are really good.
But you have to use somebody that knows.
They're very picky.
So with that down payment assistance, we're going to go back to something Brian touched on from a real estate standpoint that people just aren't using, and that is buying down the interest rate.
Right.
So if we're helping Brian buy a house, first thing we're going to do is when we make the offer, we're going to say we need 3% to buy down the interest rate. Something like that.
Very common, yeah.
And so then that buys down the interest rate on a permanent basis.
That's one way.
Yeah. So if you buy down the interest rate and then you start using these other down payment assistance, now you have a lower interest rate and a
lower down payment.
So do both.
Yep. We do that all the time. So that's one way of doing it. The other way is the question of where we're going to allocate that money. So let's say I'm buying a house for $500,000, just as a quick example, and I'm getting
3%,
$15,000. What are you going to do with that money? Well, you can pay closing costs. You cannot use it for down payment, but you can use it for closing costs and buy down costs, meaning I'm going to buy that rate down. So I'll say, look, you can either buy the rate down permanently for 30 years. I'll see you in 2056. And see if that worked out, right?
Mm-hmm.
Or 2, you can do a temporary buy down where it's lower the first year, then it goes up 1% and up, so forth. So temporary, and then your payment's higher. Or you can look at this our FHA ARM product that 5 years. Let's go.
Yeah.
So
and when you buy down the interest rate, it could save you $200 ish a month. So it really does help.
Yeah, it does help.
Yeah.
Or you could buy it down $350 for the first 5 years. Really depends on your situation, but yeah, there's all sorts of options out there.
Yep.